What do you attribute the sell-off to, and what's your outlook for the rest of the year?
It's a really interesting time in the market because it's almost a tale of two markets. Crypto retail is in max desperation. We've seen leverage blowouts, we've seen issues with vaults, we've seen issues with yield protocols, and the market for sort of crypto native retail is just more depressed than I've ever seen it. I think that market is close to a bottom. It's hard to find a crypto native investor who still has much enthusiasm for the market. I think the market is shifting into an institutionally driven market. And interestingly, that market is still bullish. When I go out and speak to institutions or financial advisors, they're still excited to allocate to an asset class that, if you pan back and look over the course of a year, is still delivering very strong returns. So my view of the market is we have to get through this retail flush out. We have to hit bottom from a sentiment perspective. I think we're very close to that. And then I'm optimistic that we rally into the end of the year and into 2026 as the institutional investors who are more maybe even keeled about what's going on at a fundamental level in crypto start to drive the market forward. So I'm optimistic, but we do have to finish this washout of retail sentiment. And again, I think we're closer to the end of that than the beginning, but there always could be a little bit more downside.
Hey, what's going on, Bull Runners? Welcome back to the channel. Today, we're going to be diving into some critical stories that could change the game for your investments, from XRP's surprising turnaround to Ray Dalio's warning about a potential market bubble, and a deep dive into retail versus institutional sentiment in crypto. The clock is ticking, so stick around for the next few minutes where we cover it all and break it down for you. Plus, we'll head over to X to get all the breaking news that's happening in the crypto world today. We'll go into more detail about Ray Dalio warning about the Fed stimulating this bubble. Positive news for XRP. Whales have capped selling and wallets continue to grow to an 8-month high. We're going to head over to Google Trends and see where do we stand as far as sentiment when it comes to crypto, Bitcoin, and XRP. And we will be jumping into the charts for XRP, looking at very important levels of support and resistance that you need to know about right now. Plus, we'll be looking at our long-term and short-term momentum waves and so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day doing crypto research, well, that is what we do for you on this channel every single day. So make sure you subscribe right now. And if you are still feeling bullish about this current bull run, let us know by commenting 777 down below.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
First up, we're heading over to CoinMarketCap, checking out the overall health of the crypto market. We're trading at $3.38 trillion total market cap, down another 1.46% today. If crypto continues to bleed out, we're looking at our next level of support all the way down here, which will get us back to these levels that are reminiscent from May of 2025, where we were at $3 trillion total market cap. Fear and greed index still sitting at the edge of a cliff of breaking down into extreme fear, currently sitting at 21 out of 100 in the fear zone. Altcoin season reading 22 out of 100. So we are on full Bitcoin season. Bitcoin dominance has dropped a tad from 60.1 down to 59.8. Bitcoin ETFs continue to bleed, minus $10 million today, bringing the week's total to $900 million worth of outflows. Ethereum also having problems to the downside, minus $3 million worth of outflows, bringing the total tally for this week to minus 477 million. So again, like we talked about, the big corporations are taking profits for their clients, and they're making really good profits, as we know, because we went into the highs. They were buying tons and tons of Bitcoin and Ethereum back at the beginning of August, and they've been taking profits along the way since. Top 6 cryptos by total market cap. Number 1, Bitcoin at 101,500. 2, Ethereum at 3,300. 3, Tether at $1. Number 4, XRP at $2.21. BNB at number 5 at $952, and Solana at number 6 at $156. The biggest, most important traditional finance news that's going on right now is the tariffs ruling by the Supreme Court. Trump says it would be devastating if the Supreme Court rules against the tariffs. And it's come out that Trump said we may have to actually refund money back to the countries that we've already collected over $1 trillion worth of money from the tariff money. High impact financial news. The manufacturing PMI came out earlier this week, was a good number. It was actually lower for manufacturing inflation. The non-farm employment payroll did come out from ADP. ADP says that actual number is 42,000 against the forecast of 32,000. You may be asking, well, what is the non-farm employment? It's the estimated change in number of employed people during the previous month, excluding the farming industry and government. So we're up 10,000 jobs, which is very positive numbers for the economy. Services PMI, services being your air conditioner guy, your roofing guy, mechanics, etc. That inflation has gone up a little bit. So it's forecasted at 50.7. It's reported at 52.4. Next week is the biggest numbers that you need to pay attention to. Next Thursday, we'll be coming out with the actual inflation numbers for the economy. We're going to be having some more unemployment claims numbers as well. So we'll continue to bring this to you. If you're getting value from these videos, make sure you smash that thumbs up, and also make sure you hit that subscribe button. As you heard about the intro of the video, retail crypto is almost at a bottom with sentiment, while institutions are bullish. So we do know companies are continuing to add crypto to their treasury. So when we take a look at the crypto Google trends, the sentiment of how crypto is doing, we got blue is crypto, red is Bitcoin, and gold is XRP. We can see November was when we had that massive run up for crypto. Bitcoin did reach the 100 level the week of November 10th through 16th. As we take a look here at Bitcoin in the charts, then that week would be right here, and price did continue making a nice move to the upside before having a pullback, surging into basically the beginning of Q4, where we saw a new all-time high for Bitcoin at 126,328. And we've been on a downward trajectory ever since. As we look here at the weekly charts for Bitcoin, you can see we actually broke through all of our supply and demand zones that we were hoping would hold, including the one that we broke through just now below 102,609. Now, the real important thing is that if we have a bounce back above this level, then we're going to be okay. What I mean by that is if we have a candle body close below there, there's potential we continue dropping. Let's even open up our fair value gaps. We have a fair value gap to close all the way back here to $86,000. And what is interesting, if we take a look at Google Trends, the week right after, so this is the October 6th week, the week after that, Bitcoin surges and hits its recent high at that time, only 50 as far as that goes. Remember, the 100 level is the max level that we have experienced for Bitcoin. If we take a look at XRP, it hit its max at 79 back on the week of December 1st through 7th, and then also had a new recent high July 13th through 19th, tying Bitcoin at 63. If we take a look at the XRP charts, that is literally when XRP hit its new all-time high of $3.66. It coincided exactly with the week of the Google Trends. Now, this doesn't always coincide with the all-time high, as we saw with the Bitcoin's all-time high not coming in on November 16th, but actually later on, we continued surging up. But now if we take a look at existing sentiment, right now XRP is all the way down at 17. Crypto itself, just crypto in general, is all the way down to 19. Now, some people are still searching the term Bitcoin while it's sitting at 40 right now. So you can look at this of one of two ways. Okay, all of the public retail traders do not care about crypto right now. Does that mean that crypto is over? No, basically the contrary. As we know, all of these corporations do continue buying, and there are lots of retail traders that are selling. However, the smart buyers are the corporations continue to load up, and the smart buyers of retail buyers, like a lot of you guys, are, from what I'm hearing in our private community, Altcoin Pro, telling me that they're dollar cost averaging as the price continues to drop, which is a smart move. Unless, of course, you think crypto is completely done and it's over with and it's never going to come back to life. Which that brings me to another interesting post that I saw today, and that is the Quantum Doomsday Clock, March 8th, 2028. They're saying quantum computers will be able to steal all of your keys for Bitcoin. And this ex-user, Credible Crypto, they do a lot of great posts, actually. I went through this. He said he bumped into a guy that was a CEO of a private cybersecurity firm. They ended up having dinner, found out that the guy doesn't own any crypto, but a lot of his friends do own crypto. But he was extremely confident that quantum threat to crypto is coming faster than most are expecting. He did say what is echoed here, that people will need to move their funds, quantum proof their crypto as soon as possible. But what he also said is this right here, which was interesting. Because of this inevitability of quantum being able to hack Bitcoin, he believes Satoshi, if he's still alive, will need to move those funds from his wallet within the next year. And that is one of the topics we have been discussing deeply over at Altcoin Pro University. If you would like to join our community of 962 private members, there is a link down in the description. Feel free to join that. Get started with us today. We also have this post here from John Squire. You're watching The Exact Moment. Brad Garlinghouse confirms a $500 million investment into Ripple. He did it live at Swell, which will be backed by Fortress, Citadel, Pantera, Galaxy, and Brevin Howard. Now, what's interesting, the company is going to be a $40 billion valuation. It has not gone live yet, but a lot of XRP community members I've been talking to are actually excited about getting an opportunity to own Ripple, the stock, as well. They understand that Ripple is going to be using XRP as one of their core products to support what Ripple, the business, does, and they believe in both. So they would like to be able to invest in Ripple as a company.
Morning to everybody. Great to be here. Day 2 of Swell. Honored to be here with Patrick Witt. Before we get started, well, first of all, I'll say it's fun for me to be the interviewer versus the interviewee. So I just get to sit here and ask questions, which is fun for me.
I'm in the hot seat today.
The hot seat for sure. So before we do that, I just want to take a minute, and this is the 9th Swell, which, the very first one that was in Toronto. We have come so far from, maybe 100 people was in a warehouse on the outskirts of Toronto. But in addition to, acknowledging some of the stuff that Ashish pointed out happened overnight, earlier this morning, Ripple announced a $500 million investment from led by Fortress and Citadel, some of the biggest names in finance. And so, although we're not talking about that today, at least wanted to acknowledge that so that people are aware that we're not just ignoring it. It is nice to take a moment to see kind of how far we've come.
There's been a lot of debate on the internet today whether prices are down or up for all of the costs of goods that is brought on and spurred by Trump coming out and saying that prices are lower than they were just last year.
We only have one thing, beef, because the cattle ranches are doing well. We're going to bring the beef prices down, and they understand that, even if we have to help them out. But the beef also is not a big difference, but every price is down. The biggest price is energy. We're at almost $2 for gasoline. And you take a look at where they were at $4.50, $5 for gasoline. And when we only have one thing.
So let me know your opinion down in the comments. Are prices cheaper? Now, gasoline is nowhere near $2 for me. I live in California. Prices are about $5 a gallon for premium, $4.50 for the basic. And going to the grocery store for basic necessities does not seem to be cheaper for me. Also breaking today, the Office of CMBS delinquency rate jumps to 11.7%. This is the highest level in history. And as you can see, they're playing the footage from The Big Short down here. This record of 11.7% delinquency rate for office commercial mortgage-backed securities in October 2025, surpassing 2008 crisis peaks, as confirmed by Trepp data and Wolf Street analysis, driven by persistent remote work and elevated interest rates reducing property values. So what this means is all of those big giant office buildings that you see all around, they may look like there's hustle and bustle and going on. You see cars in the parking lots, but in reality, let's say that there's 20 office companies available to rent out a spot in there. Right now, instead of seeing all 20 of those places fulfilled with a business, there's a lot of vacancies right now. And the people that are actually renting out those places are behind on their rents. And the USDebtClock.org on X posted a great post here. Critical mass has been hit. Exponential growth of an idea is happening. The U.S. Treasury is going to offer 3% value per year, the dividend dollar, for the 100% reserve for the United States dollar. Now, this is really interesting because, as you know, at Altcoin Pro, one of the main things that we talk about is actually DeFi yield and earning actual yield or interest off of the tokens you already own. Well, what if every single dollar that you had didn't have to be stored in a savings account, but rather just your regular bank account, and it accumulated 3% value a year minimum? Also, breaking at Ripple's swell, we are collaborating with MasterCard, WebBank, and Gemini to introduce RLUSD settlement on the XRP ledger for fiat credit card payments, starting with Gemini XRP credit card. This initiative sets a new benchmark for institutional efficiency, enabling faster, compliant, and more transparent settlement within traditional finance. All right, XRP whales cap selling. They're stopping finally. And now wallets are starting to grow. XRP saw record wallet growth, easing whale outflows, hinting at a potential market bottom despite recent price weakness. On-chain data pointed out renewed activity across XRP ledger. Analytics platform Santiment noted a sharp increase in the XRP network participation, with over 21,000 new wallets created in just 48 hours, the highest growth rate in 8 months. XRP ledger transaction count also spiking to the upside. Crypto Quant reported record-breaking activity on the ledger's native decentralized exchange, or DEX, with 954,000 transactions, marking the most active day in recent months. XRP whale flow 90-day moving average. We can see price, total whale flow of the 90-day moving average. Positive whale flow would be them buying tokens, and negative whale flow would be the sell-off. And look at this. We have finally broken back above the zero line, according to this analysis by Crypto Quant. As we see the green levels here increasing right before a massive spike, and that was at the end of 2024. And then we also see a giant surge in green spikes to the upside, along with price rising just after accumulation in May. So it's very positive news. So this is very positive news. We also saw in the video that I made yesterday, we have also increased open interest for the XRP futures. Now, that's not translating into price just yet, but as we see, we are moving in the right direction. Ray Dalio warns that the Federal Reserve is stimulating the economy into a bubble. Typically, the Federal Reserve eases interest rates when economic activity is stagnating or declining, asset prices are falling, unemployment is high, and credit dries up. In other words, when we're in a recession. And as seen during the Great Depression of the 1930s or the 2008 financial crisis. However, the Fed is now easing monetary policy at a time with low unemployment. Economic growth is rising, which is typical of a late-stage economy saddled with too much debt. He said because the fiscal side of the government policy is now highly stimulative due to huge existing debt outstanding and huge deficits financed with huge treasury issuance, especially in relativity to short maturities, quantitative easing would effectively monetize government debt rather than simply reliquefy the private system. As we've been following along, the Fed rate cut coming up in December, we do have another one coming. It is starting to lean heavily to another 0.25 basis point cuts. Right now, we're sitting at 4.0. Looks like most people think we're going to 3.75. The Fed did slash rates by 2.5 in October, but the cut which would usually be a positive price catalyst for crypto assets, failed to lift the markets. So taking a look at XRP in the charts right now, a couple of things. We're on the weekly. We can see right here our short-term momentum, the red line, is bottomed out. Just like the sentiment, just like the search, bottomed out right now to the downside, which is actually a positive thing because now there is room for a cycle reset to the 100 level. Last time we cycle reset from 0, as we can see right here, which was June of 2025, we started our push to the upside. Now, we did have actually a good week surge prior to the liftoff week the next week, but we did see price rise from $2.20 to the new all-time high of $3.66. We're sitting at that same exact price right now, $2.20. So on the weekly, our long-term momentum is still bullish. We're still green, but it is slanted down hard, and it is aiming for a reset below the 0 line, which would turn the weekly bearish for XRP if it officially crosses that line. Taking a look at the 3-day charts, we can see our short-term momentum tried to surge here, recently reset back to 0, unfortunately could not build the momentum, and we have officially crossed below the 0 line, going bearish on the 3-day candles. We also have our midterm momentum has fully ridden the bottom now for quite some time. Checking on the daily, long-term momentum daily also bearish. We do see our short-term momentum almost fully reset cycle bottom 0. Midterm momentum also almost reset cycle bottom 0. Those are going to take 3 to 4 days to finish really surging to the downside unless we had some sort of crazy high volume move to the downside, which we don't want. The other thing that's coming into play here is our 1100 exponential moving average on the daily. We didn't want to have a pullback to these levels, but it's starting to smell like something may be coming. We got this right here at $1.50 right now. That will continue to rise. But if we take a look at our 12-hour, it's about to tap off of that. We have to have that be a last-ditch effort instead of dropping all the way daily. But right now, we do have a support level at the 12-hour, as we can see right here. That comes in at exactly $2 right now. We did this the other day. We looked at the 11-hour as well. Let's take a look at the 11-hour. Price actually did drop below the 11-hour. We do have our Fibonacci in place from our most recent swing low to our swing high. And we can see we're bouncing right off that 786. We're basically ignoring this wick for the time being, but also 11-hour bearish there, 12-hour bearish. You can see it tried to dip and rip to the upside. Unfortunately, it failed, bouncing right off that 0.5 Fibonacci. So right now, I am waiting and seeing. Right now, we're bearish on everything except for the weekly charts. We're hanging on for dear life right now. If we look at the monthly chart, this is not great news. Our midterm momentum is fully riding bullish, which is great, but short-term momentum is doing its cycle reset. Now we can see last time we did a cycle reset, it did not reach full 0. It actually started to rip to the upside before then when it bounced off of our Wolfpack 0 line. But if this continues down, we could have multiple months of downside. We have now officially broken a candle body close on the monthly below the 10 exponential moving average. We have 23 days left to rally back up and make sure we close above that level. Checking a look at our 2-week candles, we can see that midterm and short-term momentum also heading down to the 0 line. We also have this massive bearish divergence that did occur. So we do need some sort of very positive catalyst. Trump going out there and saying, rah, 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 the golden age is coming is not a catalyst that can change. We need a United States-based positive news catalyst that can push us to the upside. Until then, short term, I'm riding bearish until we can flip back above our 0 line here on the Wolfpack indicator, getting us back to bullish.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. while your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt. So this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today. And it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.